Oh, wow, bright light.
Good morning, everyone. All right. I'd like to introduce you to the mining panel of the day. This is the one. I'm Stephen McClurg, founder of Valkyrie. We've been getting involved in miners pretty recently, not because we know anything about mining or building our own, but we're investing in others, people that are smarter. So I'd like to go around and have each of the panel introduce themselves. These are some of the biggest miners in the industry.
Thank you. First of all, we can't see any of you, just to be clear, with these lights.
Bright.
Mike Levitt, co-founder, co-chairman, with my partner Darren, who's sitting out there somewhere in that audience, and I'm the CEO of Core Scientific.
Peter Wall, the CEO of Argo Blockchain.
Fred Thiel, Chairman and CEO, Marathon Digital Holdings.
And Jason Less, CEO, Riot Blockchain.
Yeah. Well, thank you all for joining us. I'm going to start off by asking, what are some of the challenges that you guys face right now as miners this year?
You want to pick anybody?
I'm just going right after it.
Aside from the fact that I would argue that all of our stocks are undervalued in the market right now.
Here.
Look, the challenges this year are similar to, frankly, what they've always been. One is executing on our plans, right? We're all building businesses. And of course, the challenge in building businesses is executing. And executing in an interesting and perhaps in ways difficult environment, including supply chain issues, geopolitical issues that impact capital formation, et cetera, would be kind of the big one that we all face. Second is this is a very fast-growing industry. It's a dynamic business. It's a very, very rapidly evolving business. And we're scaling businesses in the midst of an industry that's scaling exponentially. And we love the exponential scaling, right? We love that. There's nothing like building a business. We've got a lot of wind at your back, but even having wind at your back is a challenge. And so the focus on the details to make sure that we don't get out ahead of ourselves in this very fast-growing industry is really essential for all of us. Because at the end of the day, what we do in mining is very much a blocking and tackling and executing and getting it done business. And it's easy in a business that's growing this quickly to kind of forget, first you got to find the power. Then you got to build the infrastructure. Then you got to create the software for the overlay. Then you got to plug it all in. Then you got to make it work. That's the challenge that I think we see and that we're very focused on.
Yeah, and going off of what Mike was saying about execution, in this fast-growing industry with incredible opportunity in Bitcoin mining, we are all trying to do so many things at one time to maximize that opportunity set in front of us. So I think it's a lot different than many other industries where we are building, receiving miner shipments, deploying miners, and all of these things are happening in parallel. And there are all these teams that are pushing all these things forward. And it is a day-by-day, week-by-week race that never lets off to get that done. So, incredibly challenging, but rewarding from an execution standpoint right now. But I'd also add, I think the other challenge that we face as a mining industry right now is kind of the public narrative and the implications that has for regulation. Bitcoin is a new thing. The concept of Bitcoin mining is a new thing. The idea of why that's valuable is not always intuitive for people. So we all face negative press and criticism about our industry. So not only are we working, not only fighting to succeed in execution all the time, we are also, all four of us, fighting to win the court of public opinion all the time as well.
The hearts and minds.
Yeah, the hearts and minds.
Well, speaking of that negative narrative, we do seem to have a few places where this narrative is coming from that's quite interesting. What are some things that we can do to change that narrative or to create a new one, whether it's changing the term from mining, which is, we've always used the term mining, but data, whether we use data centers or validation, or is it getting political and trying to educate some of the either politicians or public-private partnerships or some of these other organizations that are bringing forth this narrative?
It's a bit of both. So part of it is just educating people to understand that when you say an industry uses more electricity than a country like Sweden, let's put that in context. We use less electricity than Google and Facebook use in their data centers. Christmas tree lights use more energy than we do. You got to put it in context. So part of it is explaining to people that energy isn't a zero-sum game, right? We have excess energy in this country. How the energy markets work. We're not stealing energy from consumers. Yes, there have been some less than good actors who have done some things in small communities, maybe in New York State or other places, which have pissed off some people. But we're all here professionalizing an industry while it's scaling. It started as the Wild Wild West, and we're now professionalizing a business. We're spending a lot of time collectively in Washington on lobbying. Politicians, they'll look to their staff members, should I vote on this thing? What should I opine on this? So we're educating people. We're talking to the blockchain caucuses. We're building momentum. But mark my words, Bitcoin and crypto is a single issue item for voters. And I think in this election cycle, you're going to see people from both sides of the aisle viewing crypto and Bitcoin as something they're going to hang their hat on.
And I think from our perspective, you mentioned, Fred, kind of local actors. So I think there's a couple different ways to think about dealing with regulators and people who are, the naysayers of Bitcoin. You can think about it from the top down, and you can think about it from the bottom up. So we're really thinking about it from the bottom up, i.e., how do you be a good local actor in your community? Whether we're mining in Quebec and making sure that we're being good actors there, or we're setting up a new facility in Dickens County, which is an hour east of Lubbock in the Texas Panhandle, and we're really trying to have a positive impact on the community. If you look at what Riot has done with their Windstone facility in Rockdale, they've had a huge impact locally on the economy. Yep. And then you take those stories to the state level, and you take those stories to the national level. We were in Texas last week, Fred and I, at the Empower conference, and we met with Ted Cruz, who is seeing the impact that miners are having on a local level, and is starting to talk about that at the national level. So I think our approach is definitely to take it from the bottom and then move those stories up the food chain to the top, because the opposite can also happen. You can have bad stories that happen locally, and that's certainly what's happened in New York State, and that's had an impact on all of us. So it's important for us to really think about building it from the ground up.
Yeah, no, I think, look, the education's important, the narrative's important. Ultimately, really what rules the day in this country is kind of what the people want. And so the adoption, right? Right now, for Fred's example, more people want Christmas lights, if you will, than are on the Bitcoin network. But conferences like this, right, where this is whatever doubled in size in a year, and so as the adoption, as that faith and belief in Bitcoin grows, as more wallets are opened, more businesses are created, the force of this becomes so powerful that it's going to help us deal with the false narratives. Yep. It's going to help us with all of the political discussions that we have. But I do think, to follow up on Peter, it's really, really important that all of the good things that we're all doing, the responsible citizen things, the contributing to the community things, right, are all very important because they're misunderstood. And so it's clarifying all of that. But at the end of the day, the Bitcoin network keeps doubling. Those that are on the network, those that are using it, those that are adopting it, use cases increase. At the end of the day, that's really what's going to win out.
Well, it's interesting because, I grew up in Texas, and Texas was a state that had an entirely different economy for the most part than the rest of the country. We went through our own economic cycles separate than the country did, based on the energy business there. And of course, it's changed a lot over the last few years. But when I was growing up, it was entirely tied to energy. So And I've heard a lot of stories about local communities that maybe when energy jobs are going away, you can feed those jobs into data validation, Bitcoin mining. What are some of the areas around the world that you're seeing this, where maybe the location and the economics of that location drive the business? I mean, China has shut down Bitcoin mining, or has tried to several times, and it seems like a lot of that hash rate has gone over to the United States, particularly Texas, Wyoming, a few other places. But what are some of the locations that you guys are really focused on that have broad economic impact and are good for the industry?
So, first thinking about China, I look at the excess of mining a little bit differently. I don't actually think so much hash rate was actually leaving China and going to the United States. I think it was all new hash rate that was going to China is now being redirected elsewhere. But of course, like Peter noted, we're very focused on building out in Texas, and that has been a great environment for Bitcoin mining for just a number of reasons that makes us feel a lot more secure about our business. That ERCOT grid that gives power infrastructure to 90% of Texas, that is an open market for energy, and that has resulted in large capacity of power, both being generated and also in surplus, and very low cost power. And that type of open free grid is a huge opportunity for Bitcoin mining, and in turn allows Bitcoin mining to help strengthen that grid, to strengthen the energy market and strengthen the energy experience for everyone in there. And that's not intuitive to people at first. It is so interesting about Bitcoin mining, or Bitcoin in general. I think most people before they got into Bitcoin were not thinking about monetary theory all the time and thinking about money and how it works and all of that. But when they discovered Bitcoin, something clicked. They're like, wait, that is all wrong. And now I'm learning about how this stuff really works. And very similar, I think, to energy markets. Most people don't think about how an energy market works. They pay a power bill, they flip a light switch, and their power goes on, and that's about as much as they know. And you start to learn about Bitcoin mining, and you start to understand, well, wait a second. With all these types of renewable generation sources, power's not always being generated. Wait, who's buying it when the demand is low, and how do we capitalize these projects, and how do we make load available to the grid? So it's been, I think Bitcoin is an incredible education experience for people in many different fields, and the opportunity we see in Texas to strengthen that grid by capturing surplus power, by building jobs in communities that would not otherwise be exposed to this new type of industry. Our facility in Rockdale, Texas is right on site what used to be Alcoa aluminum smelting plant and then a luminant generation facility. One of those towns that was entirely built around that industry. When those businesses left, the town is decimated, that so much economic activity left that town. Now, usually there's not much hope, for the towns like that going forward. They survive, but there's not going to be a major industry that will necessarily go in there. But Bitcoin mining is this incredibly unique load and business that will just go anywhere. So now we have come to a community. We now employ over 200 people there, largest employer in that county. People who maybe didn't know what Bitcoin was a year ago are now Bitcoin mining maintenance technicians, in addition to all the other fields that we hire from. So, now I forget what the original question was, but I'm just excited about Bitcoin mining in Texas.
I'll touch on two things. One, Jason's right. We are creating jobs. And, similarly, we've opened multiple facilities in opportunity zones where we've repurposed formerly shuttered plants, created jobs, et cetera. And it is a little bit of a shame. People talk about ESG. They get stuck at E, and they don't talk about the S or the G, frankly, in our industry. And we've done a lot of S, all of us. And you're right. We've educated people in Kentucky and Georgia and North Carolina that work at our facilities, never heard of Bitcoin. And now they're all believers, and frankly, they've all got great jobs. So it is important. The S is important. We get no credit for it, basically. With regard to your question about regions outside the U.S., look, there's a couple of things that drive development of infrastructure for the Bitcoin network. Obviously, energy is one, and the other is probably desire to enhance financial center or right? Because Bitcoin is about money, finance, financial assets. And so you really kind of got to look at like where's their power as well as perhaps a desire to be engaged in and around finance. And so and we're geographically diversified in the U.S. As I've stated publicly in the past, I have to be careful about these, but we're also looking outside the U.S. Most logical regions that we've seen are throughout Scandinavia, where you've got strong power and strong renewable power. Other regions actually that have both energy as well as desire to be financial hubs are in the Middle East, are the obvious ones, and so I think it's fair to say that those are probably two areas that will see some development over the course of time, whether it's us or whoever, I don't know, but it's energy and it's embracing, right? Because it's also about who embraces, and there are regions that are embracing the Bitcoin network much more quickly than others and have the capital to embrace it.
I think part of the problem is you have to find power, yes. You have to find rule of law. You know, you're putting a lot of capital to work in a place, and it takes you a few years to get that money back. And the last thing you want is a bunch of people with AK-47s pulling up in Jeeps saying, thank you for building us such a wonderful facility. You're no longer needed, goodbye. And that has happened recently in Kazakhstan and other places. So I think, as Mike said, the Middle East is a really interesting marketplace because they have a asymmetry in power energy, where, for example, in the UAE, in the summertime, it's over 100 degrees, it's humid, so they generate 4 gigawatts of power to run all these air conditioners. The other 9 months of the year, they only use 1 gigawatt. They have 3 gigawatts sitting idle. They would love to do Bitcoin mining, as an example. Then you have a climatology issue. I think Europe generally, the political winds in Europe are very anti-Bitcoin mining because the Greens are in power in a number of countries, especially in Germany, for example. The Green coalition with the conservatives is driving a lot of that rhetoric, and there's a lot of Bitcoin talk going on in the Nordics to some extent. But I think what you're going to see is Scotland is actually a very interesting area because they have negatively priced electricity and a lot of it. Africa's not an attractive market because of rule of law. Now, that being said, ExxonMobil is now mining in 4 countries in the world. Nigeria, Guyana, the US, and I forget the 4th country. They announced that last week.
And just one other thing to add to this, I think the one development that has changed the geographic opportunities in the last 12 to 24 months has been that there's more and more miners leaning into immersion. And with immersion mining, you can go mine in the UAE. You can mine in Texas in the summer when it's hot and not worry about dust and particulate matter on your machines in the same way when you're using air-cooled. I don't know if we want to get into the different ways of mining, but traditionally when you built a facility, you sucked in cold air from the outside, you push that air through the machines, and then you expel that air from the building. That's why mining facilities are so loud, right? That's the distinctive feature of mining is those crazy loud fans. With immersion, it's silent. You're submerging the machines in dielectric fluid, and you're cycling that fluid in and out of air coolers outside the building. So with that type of environment, you can mine in much, much hotter climates. So now all of a sudden you can set up in deserts, in regions where there's excess power. And the future will be mobile immersion, so you can set up even closer to power sources. You don't have to have as fully built out a data center. So I think that's also something to think about in terms of where people are going to be mining in the future.
In addition to enabling mining in different climates, immersion also makes that mining hardware last so much longer. Think about what a miner is. It's a piece of computer equipment that is running at full speed, hot its entire life. The fact that they last as long as they do is a testament to their engineering. But with immersion, you can, I think, help increase that lifespan even longer. So as long as, from a performance standpoint, the machine is competitive, you can limit the degradation of the quality of that hardware because instead of having hot air going through, you're submerged in fluid, There's no vibration of the components. Things are nice and calm, and like Peter said, it is a different experience. We're building 2 100 megawatt each immersion buildings right now, and you're always used to Bitcoin mines being these loud, hot experiences. And you walk into our immersion building, we joke, we can turn it into a day spa. It's so peaceful and tranquil in there.
And that's when we felt like we could lean into Texas, was when we committed to building an immersion facility in Dickens County. Because prior to that, we didn't feel comfortable, given our track record in other areas using air, even in the hot summer in Quebec. It has an impact on your machines.
The other aspect of all of this, you got to remember, is efficiencies going up and costs going down. Right? It's a lot less expensive to build and develop an immersion facility today than it was a few years ago.
Yep.
The machines themselves are tens of thousands of % more efficient than they were a few years ago. And so much like in the power industry, where solar now is actually less expensive to install, implement, and power. What's happening in our industry is both the processes by which we power and manage and operate our miners and the efficiencies are improving so dramatically that it opens up more opportunities, more places, more geographies to all of us to do that.
And you have another trend, which is we're starting to see the ability to move from central utility power generation to microgrids. And in the microgrid model, you can take a community, they're starting to do this in Southern California, where you can, instead of building a new power plant, you take a community, you give it solar power, that scale battery works at that scale, and then you add a small immersion mining container, which you don't have to touch, as a way to help finance and actually pay for that. And so while you may not see large-scale miners building these hugely distributed networks of edge mining, you will definitely see a growth in mining at the microgrid level.
And that's what's so great about this industry, is you can have massive, we're building 800 megawatts eventually in Texas. These guys are, who knows how big they're going to get in Texas. But you could also have, small, very small miners at the same time. And that's the beauty about the decentralized mining network that runs off on Bitcoin.
Yeah. Well, some of the things that we look at when we're analyzing miners is we look at the ability to create great software, the ability to manage hardware and infrastructure, and the ability to access efficient energy. Seems like you guys have all done that very well. We've seen the highest hash rates yet in the month of February, which also could mean that, what does that mean for new entrants coming in? How are they able to compete on a large scale with some of the established players?
Well, you've got the first challenge is the global hash rate will grow based on Beduda's projections 80+% this year. So if it cost you, just to use round numbers, $10,000 to mine a Bitcoin in December of last year, it'll cost you $18,000 at the end of this year. Grow another 50% next year. 18 goes to 27,000. And then there's a halving in March of 2024, less than 2 years away. Your cost goes to $54,000. So if you're not very cost competitive on your energy and your hosting and your mining, then you're going to be a bit upside down. Or if you're not using the latest machines that are 33% more energy efficient than the prior generation, you're also going to be out of line. So I think the challenge is a lot of people last year decided to come into the marketplace. They placed initial orders. They raised capital based on the global hash rate kind of being flat and projecting where they would be once they were deployed. And now the realization is setting in. They're not having an easy time raising capital. You're starting to see a lot of the less capitalized miners that don't have access to capital markets, having to either raise very expensive money or defaulting on orders for miners. And I think what we're going to see is a bit of a slowdown, actually, in some of the deployments. All of us are moving full speed ahead, guns blazing, and maybe we're 70% of that hash rate growth, but it's that other 30%, which may not happen.
And I think, look, it's a tough environment right now to be entering any market, let alone this market. I think one of the things Peter said really is the case. You kind of either want to be, you're the very small, nimble, you're making some money on it, or you're scaled and efficient, right? It's one or the other. And the guys who are trying to come in the middle now, when you've got, the capital markets have really tightened up significantly over the last few months. There are geopolitical reasons. There are a better understanding of the economic model it takes reasons, better understanding that it's not as easy as going to Home Depot, buying a couple of extension cords, renting a warehouse, and plugging in some units.
We've done that.
It's not.
Right? It's not,
was 4 years ago.
that easy to actually develop infrastructure that works at scale. And look, all of those create barriers to scaled businesses. I mean, we started our business about 6 years ago now. I wouldn't want to be trying to start to build a scaled business today. It's just not easy to do that. Because in addition to, look, there's really two factors to pick up what Fred said. There is your cost, right? Call it your cost of goods. Whether it's power, it's infrastructure, it's cost of the mining equipment, et cetera. There's also productivity, right? Those two things matter big time. And if you don't actually build really well-designed, well-engineered, well-operated facilities, your productivities are down, which means you're disadvantaged.
Right.
And if you can't control your costs, you're disadvantaged. And those two things will squeeze you really tight. And that's the difficulty that kind of these new entrants face. The practical issue is capital markets are just tough. Capital formation is tougher in this business today than it was when we all started our businesses. I mean, we were all extraordinarily jealous of like the convert that Fred did at, I don't know, $180 a share or whatever, right? It's just tougher today.
Yeah, I think Mike makes a great point. It's all wrapped up in what is the biggest barrier to entry? It's know-how. It's know-how of building this, really, I think, cutting-edge infrastructure. There's not long history of developing Bitcoin mining facilities, data centers. It's people who have figured it out and are now doing it. So there's know-how on how to actually execute on these plans. There's know-how on securing a power strategy for a very long time. Like Fred said, that is going to become increasingly important as we enter another halving. And because there's so much capital that I think went into the industry a year ago. You have a bunch of people trying to deploy that capital, and now we are in the phase once again on execution where that is becoming a lot more challenging, and that barrier is now becoming clear. So maybe people a year ago thought, well, if I just get $100 million and get a miner purchase order in, it's all me in 2022. Now we're in 2022, and that know-how is becoming very important.
By the way, it was if I raise $100 million, I order some miners, I'm going to then go public at $1 billion valuation through a SPAC.
Yeah.
Well, that isn't happening.
Yeah, we've had some issues with SPACs with regulators in the last few months. Hey, now's a little time for some audience feedback. So what I'm going to do is I'm going to do a quick yelling poll. Okay. Everybody yell if you're in it for the number go up technology. Okay.
Wow.
Yell if you're in Bitcoin because it means financial freedom. Okay. Okay, that was the response I wanted. I'm in it for the tech, right? But we're in it for the freedom, right? So what can the mining industry do to ensure that Bitcoin continues to stand for financial freedom?
Well, I think there are things we can do to make sure that the network is more impervious to major exogenous events that could impact it. The China shutdown was a perfect example of how the Bitcoin network just transferred itself to North America, and there wasn't a hiccup in it. We're seeing that Ukraine can raise $100 million and spend it in a week in crypto, and it doesn't move the market.
Right.
We see, stablecoin going in the market and buying $125 million of Bitcoin a day, and it's not moving the market. And people would say, well, that's not financial freedom because the price of Bitcoin isn't going up. No, what it is a highly liquid market with lots of flexibility in being able to absorb shocks. And so if the US were to put in place legislation that we're going to track everybody's Bitcoin and going to ruin privacy, the technology and the industry will adapt in such ways to make that better. We, as a miner, launched a feature in our pool last year that we shut down, which was actually about OFAC compliance. And that was a mistake. We shouldn't have done it, and we took a knee for that. I have gotten requests from certain people in Washington to say, wow, that was maybe a good idea. Should we do that? And we've said no. So I think it's really up to the miners to really kind of put their feet down and be confident in the fact that we shouldn't be bullied by regulators. Mining is really a transaction processing business. It's Bitcoin miners are easy targets from the E of the ESG piece. And there's certain other parties in the industry who have been trying to kind of poke at that in a kind of comical way. But I think what we as an industry really need to do is we are there providing the security of the Bitcoin network, and that's our role in life, and that's what we have to do, and we have to do it with great fault tolerance, great redundancy, and at low cost to ensure that Bitcoin flows.
Yeah, look, we're the fiduciaries and stewards of the network, right? We're providing the service to the hundreds of millions of people and growing that believe in the network, that are building the network, that are transacting on the network. We're the fiduciaries, right? That's our job. Our job is, as Fred said, to make sure it has integrity, right? It's our job to make sure that it works, right? It's our job to keep it running, right? That's really what we do. We provide the service to make sure that this extraordinary creation thrives. That's what we do. It's not that complicated. And all that is required to make sure we do that is what we're trying to do. That's it. That's really it. And that's our charge.
I think as an industry, we're all big miners. We're very focused on building out our operations, mining as much Bitcoin as possible because we all believe in it. But as a broader industry, I would say an important thing we can do for Bitcoin is to continue to encourage, incentivize, drive innovation within mining technology. And that will strengthen the network by not only making our businesses better, but allow different scales of miners to exist. I think right now we're going through a phase in the industry where people are starting to look at the modularization of Bitcoin mining hardware as opposed to just relying on one single box. Intel getting into the space, producing chips for Bitcoin mining, although started on a limited batch that Peter's very, very lucky to get in the first round of. That is going to lead to a new era of innovation in Bitcoin mining hardware that will make mining possible better on an industrial scale, but even more feasible for the home miner as well. And this will drive further the decentralization. There was a panel yesterday about Stratum v2 that allows more home miners to participate in a more detailed way in block construction. And I think all of this is coming together. I think there's a kind of bottom-down effect as a result of so much capital going into the industrial side of Bitcoin mining that is driving innovation that trickles down and proliferates mining on all scales as well.
I'm not sure it was luck, but thank you.
Yeah, I don't mean to discredit it. Yeah.
The one thing I would say is that what's interesting about publicly traded miners is that we have this transparency and we have this public face of our companies, which, when the majority of the hash rate was in China, it didn't exist. So it's kind of like a really nice fit for the Bitcoin network because, you know that there's a significant amount of hash rate that's being validated right now from the companies that are on this stage. Yeah. And so that's, I think, a nice balance for these publicly traded miners who are, as Mike said, securing the network and providing this service to Bitcoin.
Yeah, it's funny because I'm used to the old days where, nobody talked about their miners. They were in secret locations, and nobody talked about how they did it because they didn't want anybody else to copy them. And now it's completely changed. It's become very transparent. Final question: what are you guys planning to prepare for, in the coming years? What are some of the future challenges that you think the industry will face, and how are you really looking to prepare for that?
One of the most important things is around energy efficiency. While the FUD around cryptocurrencies being used for sanction busting, et cetera, will ebb soon, I think people will realize how transparent it is. The energy story is something that a lot of people are focused on. It's an easy story to misrepresent, and it's an easy story to misunderstand. And I think one of the key things we have to do is be able to show that over time, as the global hash rate reaches a level of kind of stabilization where the margins start coming down to kind of maintenance levels, we all need in the industry to be focused on how do we drive energy consumption on a per terahash basis down? How do we find ways to create new energy generation that doesn't negatively impact consumers and grid operators, such that the politicians get behind what we're doing as opposed to attacking it? And continue to fund research at layer 2, for example. Marathon has created an incubator. We've created a labs where we work with a lot of energy storage and other technology companies now, where we're investing a fair amount of money in activities such as how do we make Lightning more productive at layer 2? What sort of infrastructure needs to exist at the software layers to make things more prevalent? What can we do around driving energy consumption at the miner level down? Talking with immersion vendors and working with them to make their immersion even more efficient, more effective, talking to chip designers about how they need to make their chips more efficient. If we can take the energy impact of the industry, we not only do the self-serving thing of lower our cost structures, but we also can add to the adoption of Bitcoin, ensuring Bitcoin's long-term longevity, increase the number of transactions done around Bitcoin so transaction fees over time grow, and at the same time lower the energy consumption for the environment.
Yeah, we talk at our company about efficiency, productivity, and innovation. Right? Those are really what we're all focused on, and it is interesting that sort of we've all developed what I would call innovation businesses, labs. We have a blockchain technologies business with over 30 tech folks, principally the former Radar folks who are working on innovation in and around our industry, not just productivity, not just to enhance productivity in our mining, although we're doing that always and constantly, but innovation in and around our industry. Because at the end of the day, right, the business is getting bigger, but as Fred pointed out earlier, block rewards are going to go down. Global hash rate or competition is going to go up. So we have to be more efficient. We have to find ways to enhance our productivity. I mean, we look at productivity, what we're producing per exahash every day. I look at the statistic to see how we are doing. And innovation. It's those three things are where I think it's fair to say, we're focused, and I think we're all focused. And if we can get those right? But those are the challenges too, by the way. It's always interesting to be in a business where that your production per unit of something is going to go down. Like we can actually see our future, right? And that's unusual for the businesses I've been in.
Yeah.
So we know we have to be more efficient. We know we have to be more productive. And we know that if we don't innovate, we're going to be in trouble. Right. And that's why we're all investing in those three things.
And if you talk to people in the traditional data center world and you say to them, how quickly, where's the most innovation coming from in the traditional data center world, they'll tell you it's actually being driven a lot from crypto miners,
yep.
Bitcoin miners, who are moving so quickly because we need to be efficient, because we need to innovate. And so we're moving at a speed that they have never seen before. And and they're just kind of standing back in awe. You know, we have this joke like crypto years, right? 1 year in crypto is like 7 years, like dog years. And we
I'm 25, by the way.
That's so funny because I'm 24.
Exactly.
But Stephen, I think the big trends that we see are, you know, when I think about Bitcoin mining, I think about access to rigs, access to power, access to capital. What we're seeing is more and more folks are getting close to power, you know, having power agreements directly with generators, maybe eventually having JVs or very strong partnerships with power generators. And on the rig side, we're seeing more and more opportunities for innovation in rigs. You know, we've just signed this or announced this supply agreement with Intel. Intel's now making, you know, blockchain chips, SHA-256 mining chips. Who would have guessed, you know, 3 or 4 years ago that the biggest chip manufacturer in the world would be making, you know, a Bitcoin mining chip? So we're starting to see that that proximity to machines is changing, and so that's very exciting because I think that trend's only going to continue.
Yeah.
When I look at the next few years of Bitcoin in this industry, I'm very confident in Bitcoin's success. Bitcoin has reached, I believe, a critical mass with proliferation of the peer-to-peer network and mining and development to where Bitcoin will survive and withstand any type of attack. That being said, adverse regulation will slow that down, would slow progress down, I think, for all of us. So we all want to avoid that. So for us, and I know all of my friends on the stage as well, a real key focus is once again that public conversation, getting in front of anyone who wants to learn about Bitcoin mining, anyone who wants to learn about Bitcoin, and explaining them why this works, why proof of work is necessary to make trustless consensus, and how this is enabling financial freedom for all of us.
Great. Well, I'd like to thank you all for participating and joining this panel and sharing your thoughts. I'm sure that there will be some time after for some personal comments as well. Thank you all.
Thank you.
Thanks, Steve.
Thanks, Steve.